With that, we will now move on to our last panel for this evening. And that panel is going to be right here in OD1. It is going to be on LP Perspectives, Catalyzing Venture Financing to Climate Startups. There as well, we have an illustrious panel, and I'm sure we're going to benefit tremendously from the deep insights we get from them. Just starting off, I'd like to introduce the panel to you. This panel will be moderated by Mr. Nakul Zaveri, who's the managing partner, Relativity. Relativity is an alternative investment management platform. They work with businesses who are purpose-driven, impact-oriented, and have a growth return focus. Our first panelist is Ms. Amal Liamin, who is Director Climate Change, Value Creation Strategy, CDC Group PLC. CDC Group is the private sector arm of the UK government, investing in the African and Asian markets for over 70 years. Our second panelist is Mr. Gaurav Kapoor, Head Capital British High Commission. The British High Commission in India maintains and develops relationship between the UK and India and help make it stronger, wider, and deeper through job creation, more growth and security for the two nations. Next, we have Mr. Jaap Reenking, Director PEFMO. FMO is the Dutch Development Bank, which manages funds for the Ministry of Foreign Affairs and Economic Affairs of the Dutch government to maximize the development impact of private sector investments in developing economies around the world. Our fourth panelist today is Ms. Prerna Soni, who leads the Financial Investors Initiative, Infrastructure, Real Estate and Energy verticals at Invest India. Invest India is the National Investment Promotion and Facilitation Agency of India. Invest India facilitates and empowers all investors under the Make in India initiative to establish, operate, and expand their businesses. In 2020, United Nations has declared Invest India a winner of the Investment Promotion Award. Finally, we also have with us Sheen Ma, Managing Director, Asia Platform, Total Carbon Neutrality Ventures, which is a venture capital fund focused on funding and fostering high potential startups, which will contribute to the creation of a low carbon future. Once again, a very warm welcome to all our panelists, and over to you, Nakul.
Shreya, thank you very much. And I totally agree. This is definitely an illustrious panel. And I'm fortunate enough to kind of moderate them. Very excited. I understand there have been a number of sessions in the earlier part of the conference where we have spoken about data, policy, kind of acceleration, global versus domestic issues around the whole climate play. But I also wanted to kind of reiterate that we will have to revisit some of those points as we discuss today's topic, specifically around catalyzing venture financing to climate startups. With that background, let me also qualify, please excuse any errors, tech issues that some of us go through. As I call, this is the next normal, where all of us, have got regulated, but still surprises do come through. I also want to kind of mention that this is a milestone for many of us on the panel. I remember doing my first climate finance deal in late 1990s. People used to look at this as a very surprising element. This is when the Kyoto Protocol was signed and environmental finance was spearheaded. It was fascinating times. I was one of the few people globally trying to understand the dynamics and mechanics and nuances of environmental finance. And I've seen this evolve, and it's extremely exciting of on where we have landed. As a precursor and a data point, and I was researching around this, we have seen close to 56x growth of funding in climate tech between 2012 to 2019 in India alone. It's a fascinating number, right? We still haven't seen scale as much as we would have liked to compared to global markets. But the reality is we're looking at about a 20% CAGR and expected funding of about $500 million, 203 new startups alone in 2019. Also, if you have to compare it to the global numbers, this number was $149 billion. So yes, there is a material difference there, likely so, but I'm sure the potential, the scale India can provide is next to none, and hopefully we are getting there, and this is a great initiative. With that background, I also wanted to reiterate that climate is an important and integral part of sustainability as a broader concept, and everyone uses this in a very, very different context. So again, I would love for panelists to try and be specific around what kind of sustainability, ESG, climate elements they are thinking about. Most sectors, and when you talk about catalysts, start from policy. And I want to start on a macro level right now. And I would love to hear views from, Amal and Gaurav, and also Prerna, in terms of what are some of those material policy impacts that we are talking about. For example, there is COP26 happening recently. There are also European standards which are accelerating across financial and regulatory regimes. So we'd love to hear how those are shaping up, which are essentially pushing or pulling some of the venture financing aspects. Amal, we can start with you.
Thank you. Thank you very much for the invitation to join this this very distinguished panel. And yes, I think as you say, Nakul, it's we're seeing a lot of movement really ahead of COP26, and on the policy side, but also I think very, very much on the corporate side. And in particular, we've seen hundreds, if not thousands actually now, of corporates, range from really big corporates such as Microsoft and Apple, who have made very ambitious commitments to net zero. And I think that's really a new driver within this space, because we're starting to see, I think globally, an interest coming from the corporate sector into climate tech, recognizing that to deliver and meet their net zero goals, that new technologies will be needed. And I think this is a very, very positive development, as it means we have new players working in the climate tech venture space, and in particular bringing obviously the funding, but also their expertise and know-how, which is also critical. Recognizing that the people and talent and skills is equally as important really as finance in many respects. I think more broadly on the policy agenda, it's probably fair to say that it's still maybe we don't really have a very clear global regulatory market for such technologies, and that potentially can actually be hindering innovation. Having more common regulatory incentives and thinking about issues around IPR as well can really help drive much greater acceleration and scale up, in particular, of these technologies that will be needed to really bring them to market. So I think very, very positive. A lot of really excellent developments from the corporate side, but of course policy does need to really catch up in many respects to really get to this market to scale and ensure that these technologies and innovations are really then enabling the global and country transition to net zero as fast as possible, and bringing all those other development benefits, social and economic benefits that new technologies can really provide.
Super. Thank you, Amal. Gaurav, do you want to give us your perspective?
Absolutely. So again, thanks to IIC for the invitation. I think it's a really important topic, and it's great that we're having. So building on to what Amali was saying, I think global partnerships are very important because COP26 is an example where governments have come together to look at a policy initiative for the world, literally. And when the UK took on as an example of the COP26 presidency, 26% of the world's the countries representing the world economy were covered by a net zero sort of target. And that, in due course, till recently is above 70%, which includes all of G7. And India is also demonstrating huge amount of leadership with the ISA, CDRI, to really shape the world or the new world in many ways. And technology is quite centerpiece in that sense. So part of the role that governments have is also, that of market making and their role as an investor as well. So in terms of market making, look at it from a country perspective. One of the biggest, areas where the country's policies are enabling on using tech for climate is also in terms of, how is there any tech bias in terms of, some of the regulations, tax incentives? And is there a positive bias that can encourage it in that sense? Is it a level playing field for all players, whether it's new tech, old tech, low tech, high tech, in that sense? I think that's really important for policymakers to be really astute and alive to it. And of course, there are more traditional challenges which were there in we've seen it several years ago as well. It's about counterparty risk of payments, etc. So one of the biggest thing that holds entrepreneurs back is about certainty in payment cycles. And when you have a counterparty risk that government can help mitigate through several mechanisms and great success stories in India, then of course it unlocks and opens those markets as well. And from a perspective of capital, if one looks at it, then it's about entry and ease of flow of capital. Now, there are different forms of capital. So many of the early stage businesses, value of debt, need a different risk return profile. So how are the policies on foreign direct investment, portfolio investments, the FCRA regulations, how are they supportive to try and bring in different forms of capital that innovators and entrepreneurs in tech climate space need to be able to prove their idea and cross that value of debt to really transform businesses. And then you go on to a sector level where of course, the government has a great mandate to convene and galvanize sort of actions. And, how are a government through their investor lens looking at the fund managers? And, we have huge examples of us working with, Government of India to set up new vehicles, whether it was the Green Growth Equity Fund with, NIIF, or whether it's the NEEF funds with State Bank of India. These are all vehicles that have scaled up and really unlocked a lot of other international capital, and they're supporting really new, good businesses which we hadn't sort of seen or known a few years ago. So again, there's a role for government to come in as an investor as well. And the last thing I would say is, in collaboration, like in the India-UK corridor, UK has a lot of tech and innovation that's happening, and India has the market and the need to be able to make the energy transitions in several sectors. And it's about the government trying to bring in and facilitate that. So with that, back to you.
Thank you, Gaurav. No, I couldn't agree more. And we have seen this when in the mid-2000s, the largest country on the planet, which is part of the Kyoto Protocol, withdrew, and which was followed by a couple of other countries, and how that delayed acceleration around the whole climate finance initiative. But Prerna, given your background, speaking to some of the largest sovereign funds in the world, and some of the other investors who are also very progressive, what is your take around this point, and specifically the point that Gaurav made that government's role, specifically in this investment, is very important and critical?
Absolutely. Thank you so much, Nakul. So I'd like to put it in the perspective of what the Indian government is really doing right now. We all know India's commitment to net zero. We know the kind of exponential growth India is currently looking at. We also know that 80% of what is going to contribute to India's GDP, which is manufacturing and service and transportation and retail, all of them will have a climate loss. There is going to be a significant amount of impact that we will see on climate. If we flip the coin of that growth, there is sustainability and resilience towards which there is a commitment of the government. We know the commitment that India has made towards COP22. We know how India really is right now working towards, and it's actually one of the top countries, one of the top G20 countries, which is in process of meeting its commitment. Now, when we talk about this ecosystem and policy, really, there are three things essentially. Of course, climate and climate tech is not restricted only to energy. But if we talk about it in the energy perspective, there's energy access, there's energy efficiency, and there's energy generation. On the generation side, we know India made the commitment of 175 gigawatts, took it up to 227 gigawatts, and then we said by 2030, 40% of our total power will be renewable energy. Today, we're already sitting at 37%. That is because of progressive policies and the kind of ecosystem that the government was able to make. On the other side, when we talk about energy access, we know there were 18,000 villages in India which were never electrified. We were able to electrify them, but today now we need to work towards 100% electrification. We've done 7% of that, but there's still a very, very long way to go. I think when it comes to efficiency, and that is where the ecosystem and policy is really coming into play, for energy efficiency, there has to be a grid creation, there has to be smart metering, there has to be standardization, labeling of consumer products, and that is exactly where the ecosystems come. India's come out with commitments and policies which says that we will do 100% smart metering, and this is the kind of policy and ecosystem that we've been able to create. On the other side, as Gaurav rightly said, there has to be a funding ecosystem that is created. We know there is a SIDBI funding which has been set up for Green Climate Fund. There is currently a cess which is implied in India on the usage of coal. All of that money goes into a clean energy fund. Eventually, the idea is to use it for climate tech. In addition, the entire startup ecosystem that India has been able to build. We've spoken about the unicorns. We are the third largest with respect to a startup ecosystem. But when we talk only about sustainability, we have over 2,800 startups in India which are working on sustainability. Out of that, there are 300 which are working only on climate, which are completely funded and have been able to raise more than $2.1 billion in a country like India. I think all of that comes because of the kind of impetus India has been putting on clean energy, on climate change. Very recently we started talking about green hydrogen. Because of that transition, there is now a focus on mandatory purchase obligations which the government would put. So all of these perspectives are playing forward, making India that one market where there's a lot of focus on climate tech. In fact, when it comes to renewable energy, which is one of the biggest aspects of climate focus of the country, all of our 100% of our renewable energy currently is funded by way of PPPs. There's no money put in by the government, and that is because of the right kind of policies and right kind of concessions that the government's coming out with.
No, Prerna, I think you made some very interesting points, and I think this just reiterates the criticality of the government. And I think in the Indian ecosystem, I think they've done a stellar job. I remember in the mid 2000s, Indian solar segment were in early double-digit megawatts. We are now close to 100 gigawatts in terms of pipeline and operation projects. And the J curve really came in because there was a lot of work done around ecosystem, both obviously domestically and at an international level. And that's spearheaded so much more ecosystem. And that goes to my second question, and I would love Yap and Jin to kind of come in. What happens is that, on one side, there is government building ecosystem, but any material change happens when you have a very strong alignment on availability of capital, availability of technology, cost effective, government enforcement, and public awareness. We believe that some of these things are really getting aligned, at least over the last couple of years and going forward. And specifically when it comes to public awareness, right? Investors have now started realizing that sustainability and profitability are not mutually exclusive. And we are seeing new generation of the Gen Zs, and especially my kids, and I'm sure all of us are taught in schools about reduce, recycle, and reuse. So we are seeing that there is an audience which is evolving, and therefore, Yap, FMO has done some phenomenal work at the forefront of sustainability and climate investing. What has your experience been in emerging markets? Do you see that there is so much more you can do, and there are certain gaps that you would like to fill as an investor, which can deploy even larger amounts of capital? Obviously, there are policy concerns, but otherwise, from an ecosystem perspective.
Thank you so much. It's a good pleasure to be here among the distinguished panelists and for this very timely subject. So for us, we are the corporate venture arm of an international energy company. So climate is really in our day-to-day operations, and it's very close to our heart. We have just changed our name from Total to Total Energies to addressing the energy transition and in order to addressing the climate change challenge and therefore the carbon neutrality. So I totally agree with you. I think to some extent, although it's not COVID that is the reason that there's a lot of climate investment or capital being allocated in the sector, but certainly it has accelerated the trend. And there's, as you rightly pointed out, there's really a global awareness and consensus. Not only the government single-handedly pushing for it, not only the investors asking for it. It's like global, from the public to from the companies themselves, from the investors and from the government. There's a consensus. The trend is there, the momentum is there. So that is all very positive. And we did say, we've been in the sector doing investments since 2008. In early years, it was sometimes could be very lonely and could be very difficult. And these days, without one day pass, we're not hearing some companies or some private equity funds allocating a large resource in the sector. So we said that as all very welcoming, very positive to address the issue. It's really much needed because the issue is just massive. The reason for that, I think, even with all these resources pulling in, the challenge is very big. We have all the reason to see that there are all sorts of pitfalls. We could get it wrong this time as well. The reason for that is, I think, people tend to underestimate the urgency of this issue. When we talk about addressing climate, we're talking about changing the power plant. We're talking about investing in the new vehicles, new airplane. We're talking about changing the industry and changing the way how people live. All this infrastructure, all this equipment, sometimes they serve for 30 to 40 years. So that means really from now, we need to get the right thing, the right solution to be in place. It's very urgent. 2050 is tomorrow for the industry. And secondly, I think people still underestimate the complication of the issue. It's not from the wood to fossil fuel. It's from a complicated set of matrix of energy to another matrix of energy. On top of that, we'll not get to zero without having solutions like the carbon capture, direct air capture. So it's extremely complicated. Even very advanced countries equipped with resource and talent, they get it wrong. One of my favorite examples is in Berlin. The government put very well intended. They support the cargo bike, where people can bring their kids to the school, and they actually spend a lot of money for a tiny amount of CO2. So basically, it's $50,000 for 1 ton of CO2. So let alone other countries that is not well equipped. So with all this, we're saying it's all good. We have all this money in, but it's tricky. It's difficult. Let's be careful. That's a global level. And then let's zoom in Asia. I think, Asia, also we see also the same trend, similar, but I still think the problem is more more urgent and more important in Asia, simply because, the economic growth are here, and the new power plant is added here, and the new e-commerce is bringing a lot of activities here. So I mean, the CO2, one CO2 in Asia is the same as the CO2 elsewhere, and one plastic in the ocean in Asia is the same as elsewhere. So I think Asia, to some extent, still need more resource than we have today, still need more awareness to attract more resource and talent there. And finally, as an investor, we have been investing in the sector, in the VC area, in energy mobility sustainability. One thing that I always found it's very urgent in our field, in the emerging market, is a structural gap of the investment. Because we see a lot of money on the early stage, we see a lot of family foundation, a lot of VC, a lot of incubator program in the very early stage, smaller funds, a smaller ticket size, or even grant for the very early stage startup. And then I think early on, the panelists in CDC and a lot of our distinguished panelists mentioned that there's a lot of money also available for later stage. When company already survived all the difficulties, and now they are on the trend to become very big, then there's a lot of money there. But what is difficult is bring all this talent, all this opportunity from the very early stage to the later stage when they can really addressing the problem at scale very efficiently at a cost. So I think that's where maybe venture capitalists like us with corporates, we hope we can have a longer view, but we hope that we could join with like-minded investors to really fill in the gap in the middle, to really addressing and have impact where it is much needed. Pass back to you.
Thank you, Shin. You made some, again, very interesting points, and I agree. Time for doing impact at scale is now. There's a lot of dollars available for early stage. At Relativity, that's what we are aiming to do. I would love to hear Yap's perspective, given his years of experience around this and FMO's continuous evolution. Yap, over to you.
Yes, thank Nakul, and thanks IIC for having me in this panel. Yes, it's of course in FMO's heart almost, with our long-term mission to contribute to a world that in 2050 we still can live well within the boundaries of this planet. I think by doing so we also have a clear focus on SDG 13, climate action, so it's really in the core of our strategy. At this topic, it did get a lot of attention this year because of all the natural disasters, and I think also in India you experienced quite an interesting phenomenon that the glacier really collapsed. So I think that also made clear to the wider public that this is a very urgent topic and needs a huge investment. The European Union is developing a European Union taxonomy, which will require companies and governments to really stick within certain boundaries. And so I also heard what Gaurav said, that indeed, I think the governments are putting limits now to what companies can do. And even more interesting this year that Dutch Shell was ordered by the judge to really stick to the 2050 net zero, and that they also have to make a more clear agenda towards that. So I think from all sides there's a huge pressure on us to contribute to climate action. And indeed the topic is really wide because you, as Prerna said, you can work on efficiency, and especially in a country like India, which has a lot of SMEs. I think 50% of all national income comes from SMEs. So SMEs are small companies and they don't have the knowledge, they don't have the experience, and they don't have how can we contribute to efficiency improvements in use of energy. And then, in the production, I think India is doing a phenomenal job. We have been active also in financing a lot of solar projects, wind projects. I think even in hydro, there's still investments going on, and so the production of clean energy is taking off tremendously. And I think energy access also, but there also you can find improvement. And now I think the next phase which we're seeing is of course the electrification of transport and or a lot of other things. And actually it requires also the technology to bring grid stability at all times, and with more solar wind power coming into the system, and you also need to be able to keep the system stable, which requires technology. It also requires technology to bring clean power to the off-takers of electric vehicles, which are taking off tremendously. That also needs technology. It's a tremendous technology change. So there are niche markets within the clean energy revolution in order to fight climate action, where you can actually find good opportunities for venture capital in technologies. I think another topic I like to raise, because we're talking about climate action, which also means you can look at climate adaptation, which also gives a huge area where you can look for further investments. But without going into it in more detail, but I think also in India, people are aware. And coming out of the Netherlands, which is for 80% below sea level, in the Netherlands we are aware that we have to adapt also to climate change and increase the level of our dikes in order to not end underwater. I will stick to that, Nakul, for the moment.
Thank you, Yap. I'm hearing some very common themes, very interestingly, right? They're saying that the sector is very wide. Second, as you said, European Union is talking about building a taxonomy, which is, I think, very important. And that's a great segue for my next question. I would love Amal and Gaurav and again for you to kind of come in, because the definition of some of these topics, whether it is climate change, whether it is climate tech, whether it is green tech, whether it is impact, has become very important, because also investors and limited partners like yourselves have a certain approach to working with investors. There is also a worry about greenwashing on one side. Everyone is talking about we are doing impact, or we are doing addressing climate issues. And suddenly, ESG has become a buzzword. Would love to hear, how are you thinking about climate change over the last couple of years or decades that has now evolved into climate tech? Because earlier, it was green tech or clean tech, which was more of renewable energy and some elements of value chain around it. But now it's climate tech, right? And we also have parallelly a climate bond conference going on in some other part of the world. So there is a lot of discussions around this thing happening, but would love to see how you guys are thinking. And this would really be helpful for GPs to try and understand and segregate themselves about what is the right kind of investment or capital pool that they should adopt for. Amal, would love for you to start.
Thank you. Yes, I just want to pick up actually on a couple of points that were made by some of our panelists. And this is very much a priority for us at CDC, is how we can invest more in adaptation and resiliency businesses and technologies and service providers. It's a very challenging, well, I can't even say it's a market. It's not even a nascent market, really, I would say. I know we've talked a lot about net zero, and it's, we see a lot of investment going into, particularly in the mobility, electromobility, which of course is excellent. When we look at adaptation resilience, we know that there are, the policy context is not clearly there. The need is very much there. I don't have to say to everyone here on this panel how climate impacts are affecting all of us now. Unfortunately, probably even more so than we originally thought, maybe a decade ago. And so the urgency for bringing forward the solutions to enable different sectors, different communities to be able to become more resilient to the changing climate is really, really urgent. So we've been looking at this, and I'm sure my colleague mentioned earlier, probably we have a new venture capital program within CDC, and are working across the firm with a focus on climate tech, including critically the importance for adaptation resiliency technologies. We see that there are some really interesting, very early stage innovations, often very small scale, and the ticket sizes, probably too small for us. And of course, that's a common, I think, unfortunately, a common barrier. So we're looking how we can strengthen partnerships with those that are looking to take those very early startups from an incubation through that acceleration phase to a point where we can invest more in those. And I think, I just wanted to give a good example of one investment that we made this year, which, is, I think, a really key example of the type of adaptation resiliency innovation and technologies that is really needed, and that is a company that, in fact, they may even have been represented in the previous panel on food and agriculture, I'm not sure, but Cropin, which is basically a company in India that basically provides data services, utilizing artificial intelligence, machine learning, drawing on satellite imagery, etc., to enable smallholder farmers in particular to to better understand what climate related and other data that is relevant to their outputs and productivity, to better analyze that and interpret what can be quite complex data in a way that is meaningful for their practices. I mean, this, CDC, we made an investment. We're one of two co-investors earlier this year. That business, Cropin, however, had benefited from earlier support from the Bill and Melinda Gates Foundation, as well as others. So had really had, a lot of that kind of acceleration support to get the company to the stage at which we were able to invest. And we need to see many more of these types of companies. We need to see many more of these technologies. As I say, the urgency of this agenda is it cannot be understated. And recognizing that all companies, all communities across all sectors will need to have a much better understanding and support, whether that's in the form of data or whether it's other types of services, to be able to adapt to climate change and the impacts of climate change. So I do see this as, and from CDC's perspective, I say it's a priority. We are leading a DFI collaborative on how to accelerate private investment in adaptation resilience. Delighted that FMO was one of the initial founding partners alongside ourselves in that. We have other DFIs, multilateral development banks partnering, as well as also engaging with those foundations that also are going to be important in helping to really get these technologies and businesses off the ground in the absence of a positive, supportive policy and regulatory framework. Now, of course, that policy and regulatory framework will be essential, and that is, I think, in the partnership, we see the role of some of our partners can really engage with governments on that front, even where others, such as ourselves, the CDC, we wouldn't be doing that. But critical that governments do understand how to create the markets for these types of business solutions.
Thank you, Amal. Just continuing this conversation, Gaurav. As I said, there is a lot of conversation around climate adaptation, resiliency, but also the fact that countries and institutions like yourselves are committing very large-scale capital for accelerating growth in climate-related activities, and we have seen that. Is there a bias for large-scale investment, or do you think that this is a starting point and we'll see a lot of focus around early-stage capital investments, which are even seed and Series A plays around the segment from institutional investors?
Yes, I think that's a great sort of question. Sorry, Jaap, do you want to step in?
If you don't mind, I think it's one of the issues, and I will keep it short, Gaurav, so don't worry. So I think your question is really interesting, because as development bank, we always have to be additional to the commercial market. So, and what you've clearly seen, and that's a change compared to, say, 7-8 years ago, is that at that time, there were not that many commercial investors really willing to participate in early stage, larger solar and wind type of investments. And that market now is, it's a common market. So prices went down, usage is widely accepted. So I don't think there's that much risk in that market anymore. So commercial investors are willing to put in money in those markets. So for development banks, then it becomes more interesting to see, where are still the financing gaps to fill, and how do we do that? So FMO set up climate fund managers, which is a fund which is a blend fund with government participants and commercial investors, and they can invest in the very early stage of a project, and then take it along until it's a developed project, and then it's financed by the commercial investors, which is an innovative setup, but it does work because they raised $850 million, and they invested already 500 million, and now are investing in the second fund for more focused on water treatment and water. However, so for developed banks now, it's also the challenge to see, okay, where's still a gap in the market where we can fill, and I think that's exactly in this technology space in the early stage. But then it becomes really difficult because as a development bank, mostly based out of London or The Hague, how do you find the right entrepreneurs who have the right product which is able to scale and be successful in the next phase? So I think we have a challenge there, but we are not afraid for a challenge. But I think that's exactly where we have to look for. And now,
Thank you, yeah.
Great, yeah. So I agree with you, Jab. I think there's a big role there, and I also think that climate tech is actually much broader a space. And like what Amali was also saying, there's a lot of focus for big institutional investors on mitigation so far, and we're trying to broaden that focus to adaptation resilience. But also more broadly, there's not much depth in many of these sectors, because much of the role that we see for technology in climate tech more broadly is emerging. And I think we also need to see a slight shift when you talked about, is there enough for institutional investors to come in at Series A? I think that's the role where VCs need to play a lot bigger role. And what we need is specialist VCs who can understand the particular sector and then move from valuations to value creation. And it's really important that they are able to look at it from the small deal sizes, where in India, we don't see too many specialist fund managers on the climate portfolio. There are very few. And on the bigger one, I think it's a responsibility to make sure that these VC players are building the pipeline that the other larger institutional players can come in. Of course, there are sectors like EVs where there is a room for big institutional investors from the start, because the more companies there are, the bigger the infrastructure, the more competition and scalability, the more sort of players come in. So those are immediate opportunities, but there's really a need for, I think, in the market for specific specialist venture capital managers who can take that early risk in companies. And also, I think it's important that fund managers are also looking at what is the talent and new technologies coming in which could be breakthrough. And it's not necessary that many of these technologies have to be the most modern of technologies or the most modern of sectors. And I can give you very quickly two examples where they have huge impact on climate. They may have varied levels of tech, but they can have impact. So, for example, whoever lives in India, whoever lives in Delhi, and whoever is trying to go into the season to December will be worried about air pollution. There are, PM10 and PM2.5, which are responsible for major health issues. And if you look at global warming, some of these particulate matters are actually almost 400 to 500 times more damaging than CO2. And in India, studies have shown that diesel generators contribute somewhere between 20 to 25% of pollution. And then you add vehicular pollution, and that's a substantial amount. We've supported a company called Chakra that actually has emission control devices. So it's an IP protected sort of where they're going in. They put in these devices on existing DG sets, and then it really helps mitigate the kind of particulate matter that's coming out. And what's good is that when they capture this sort of particulate matter, they're able to recycle it into ink. So from air pollution, it goes into ink, and it creates that circular economy that we all love and talk about. A second example, of course, again in our portfolio is a company called Perspectives, which does these biomass briquetting. Now, it might not sound very fancy or tech, but what they've done is that they're offering these kind of briquetting technology, which can, which is, of course, 14% cheaper than coal. And with the scale that it can have in India, there is that ability of, I think, 1,500 million metric ton of biomass surplus, which creates this air pollution and sort of burning, which is then prevented in that sense. So there is huge potential there. and also there is a similar amount of carbon dioxide emission is reduced because you're preventing stubble from getting burnt. And again, there is another win. So the win is that you're creating employment for this segment of people, and estimates have told us in this industry that if you're able to fix it, 2 million jobs could be created in the next 20 years. So it's really important that there are fund managers who are there, who are sensitive to these kind of business models and can come in. And both these companies, I'm happy to say, once the initial fund manager, VC player came in with money, institutional money, large scale money is now chasing them as well. So there is a way that can happen. Yeah. Thanks. Back to you.
Nakul, I actually wanted to add a point here.
Please.
So I'm coming more from the perspective of ESG, LPs, and climate risk that you spoke about earlier. So a little late probably, but when we speak to a lot of these institutional investors, especially sovereigns and pensions, and we ask them about their investments in India, of course, there's inherent risks that they're looking at in a country like India. They would look at a political risk, they would look at risks related to currency. One major risk, which is climate risk, essentially is two aspects: physical and transition risk. So physical risk would be in the form of land, in the form of their assets. Transition risk mainly is with respect to policies, legal, market changes that can actually happen in a country like India. When we speak to LPs, we've come to understand, they've now incorporated ESG in their overall investment strategies. This can actually be thematic with respect to alignment to ESG, or they can be negative lists such as exclusion of coal from their investments. A lot of GPs came together and they did this analysis, to Gaurav's point, when you're looking at investing by way of a GP or a fund manager in climate funds or climate tech related strategies. And once you incorporate climate risk in your overall valuation process, I think your entire risk factors completely change the minute low carbon emissions kick in. There are more sensitivities to areas such as energy. So coal becomes a little bit of an issue. Real estate becomes more sensitive to the potential for alpha, wherein investors are looking for a country like India. And that's where a new era comes in, wherein sustainability focused unicorns come into picture. Be it a Tesla at a global level, or what Ola EV or Arthur Energy is doing in India. That is the kind of transition that we're seeing, and that is wherein VCs come in at an initial stage, bilateral and government funding comes in at an initial stage, and eventually LPs come in to take it to scale.
Thank you, Prerna. It's fascinating. At Relativity, we are mid-market fund managers, and our strong belief, and going, Prerna, to your point, is that the value migration towards sustainable business models is not only underway, it's irreversible and it's persistent now. The question is when, how, and where do you do value capture? And we believe that this is happening at multiple levels. This is very exciting. And let me give you a data point here. The price of oil has gone down significantly between 2008 and 2011, right? But during the same time, the price of clean technologies has gone down even faster. So it's very exciting about how parallels are moving from the old economy to the new economy. And again, we very strongly believe that the only way to get superior risk-adjusted financial returns is through sustainable business model and sustainable investing. This is, as all of us know, and I'm preaching to the choir here, is going to be common sense investing going forward. And some of you have taken that additional and extra role in terms of policy and creating the ecosystem. So my question is this, and I would love for Shing to answer this, right? You're seeing a lot of companies that you're investing around clean tech. You spoke about mobility, you spoke about renewable energy, and also putting in Gaurav's point, right? Are you finding it difficult to find companies across segments, or do you think there are more and more companies coming through and it's an exciting and a vibrant ecosystem so that investors can commit to more capital in a more organized and institutional manner?
Sorry, I'll mute myself. Just to clarify the question, do you think, would you like to see if we see like more dynamic startups to be
That's
invested.
correct.
Yeah,
That's correct.
yeah, exactly. So I think, if you remember when in 28, when we were investing like a clean tech, at that time that was bio, to say, bio can replace oil, especially when the oil was the price was extremely high at that time. And also there was some other investment, for example, energy efficiency. That was a second theme. The third theme at that time was wind and solar, so those new energy. But I think as Jeep has mentioned out, those sectors, although they continue to be a major part, but they become more or less more mature. For example, the renewable energy parts, there's a very mature financing structure. There's a lot of players. It's relatively mature, and also different governments are very mature in terms of incorporating that in their energy mix. So we do see the sector become very dynamic and also become very complicated in the sense there are more and more different types of startup coming. For example, EV, electric mobility. It really become a main solution, main block in the energy, entire energy solution. In some countries, four-wheeler. In other countries, 2-3-wheeler. And also there are companies talking about electric or hydrogen mobility for the aviation. So that's something new. And also there's all this technology, those are the new factors as well, all this AI, edge computing, cloud computing, IoT, those are new. So we see, for example, in countries like Australia and also in India, huge potential because the grid is, it's challenging to develop the grid to adapt to the incorporation of the large amount of renewable energies. So that's where, IoT, AI, and this computing capacities can play a role in complementing the hardware infrastructure. So software and data can play a role together with the hardware to make the energy system more solid and robust and efficient. So that's where we see, okay, although we have a relatively older infrastructure system, maybe it's difficult to change it overnight, but we can have a software and we have digital solutions better forecast the supply for renewable energy production. I can better forecast the demand pattern. And also with smart meters, I can better to incorporate in different distributed energy resources. So those are the new things as well. And then I think there's also a consensus, regardless what we do in terms of adding low cost, low carbon solutions. At the end, we still need to produce CO2. So all this new kind of technology of direct carbon capture and CCUS is coming in. So we see it's become extremely dynamic. So it's pretty challenging for the investors because you need to really know the sector. It's a lot of technology and sector knowledge in order to really do the right investment. Because as I said, although we see on the face value, there's a lot of resources, but the resources needed is much, much more than the resources already committed. And one of the risks is we don't channel those resources to the sector or to the solution that has the lowest cost, has the quickest impact. So positive side is I totally agree with you. It's very dynamic, and lots of very good startup, good team, good solution, good technology. But on top of that, it's very challenging. But I think it's very exciting for the investors to really know the sector and do the right investment. Back to you.
Thank you, Shin. No, I think some of the very critical points for GPs to understand that these are some of the relevant points which will be important to attract institutional capital, especially at scale. I am cognizant of time here. We've got a couple of questions from the audience. I'm going to quickly ask them. I'll appreciate if we can keep these short so we can go through some of these questions. First question is around the need of patient capital and blended finance that has come out clearly in some of the reports, and especially even the report that IIC laid out earlier in the day. The question clearly is that obviously, developmental financial institutions are looking to give this and build the ecosystem. What will it really take for you to take simultaneously a larger step in providing early stage risk capital? Should development finance not the right kind of capital pool? Should they be looking somewhere else, or do you think it could be going both ways. And again, I'm opening it, so but please keep it brief.
Yeah, I can answer that briefly. I think FMO has created a venture capital program of 200 million, of which 100 million was provided by the European Union partly and the Dutch government as a first risk. So the risk return, and then FMO provided the second 100 million. So in total, it's a program of 200 million, which is purely dedicated to venture investments in primarily fintech, agtech, and this energy sector. So the answer to it is yes. It's a blended structure, and it is dedicated to, among others, the energy sector.
Got it.
So if I could just come in quickly, I completely agree. I think there's a role for different kinds of capitals, and I talked about it in the earlier bit where we ourselves have different instruments. So we have, of course, the investment instruments, and we do tend to be more patient with our fund managers and with the kind of risk appetite that they're able to take, because we try and assess impact upfront, and we try and be more generous in our setting of the framing of the investment strategy as well. But there is, still a difference between investment grade versus grants and some of the foundational money that can really come in, and I think there's a role for that as well. And then there's a role for various shades of risk return providers of capital, which include governments like ours. It includes DFIs like the two on the panel, and also other players who are more commercial then in that sense. But also I think it's really important to know that even capital providers have huge fiduciary responsibilities. So I think one has to really take that into account. Thanks. Back to you, Nakul.
Thank you.
Yeah, no, just say fully agree with that, and I think we know that's needed for all pretty much all early stage opportunities, but I would say particularly so for the adaptation resilience space, given the market barriers there are so great and the policy frameworks are so nascent at this point.
Prima?
So yeah, absolutely. I think there are 2-3 aspects which have to be kept in mind here very briefly. If we go back and look at what happened in 2011 and the fact that there was a huge talk of climate funding at that point in time as well, but it did not work. And the main reason at that point in time was that there was no seed funding available. There's a long gestation period, especially for climate technologies, which is why at that point in time, the vintage for a VC is only 4 to 5 years. So because of that, we've seen that the entire drive sort of died down in 2011. But now again, there is a movement because there is funding available from governments, there is bilateral funding available, there are green bonds available, there's of course blended finance available. There has to be more VC money coming in, there has to be more money coming in from large specific dedicated funds which are set up by multilaterals. We have an example of ISA within 163 countries which India has taken up along with France. But there has to be a scope wherein funding is made available to at least start making the market mature from the beginning. Thank you.
Yeah, also quickly to add on this, I think I absolutely agree with all the comments has made, and also in our day-to-day investment life, we do see this, and we think it's very healthy that different investors getting to know each other's investment strategy and risk-taking profile. So, for example, if there's a infrastructure element, then government certainly can play an important role. And then for startup that has a quicker acceleration, but high skill, then VC can certainly play a role where they are active. And then certainly if they also has an element to invest in some capex, then they would need to get some grant and bank loan. So with this mixture, very sophisticated mixture, I think it's very healthy for a company not overwhelmed by the high cost of VC capital, but also has a very stable mixture of financing for the different risk structure. Yeah, pass to you.
Thank you. No, it's interesting that there is just so much happening across the world, across India, and this is multi-layered. And again, Ching what you said earlier, the complexity is increasing. And as investors, we all like to move towards simplicity, right? In terms of how do we continue to simplify our investment thesis, our portfolios, and value creation. But on the other side, Prerna, you had mentioned about unicorn. What we were seeing is that there are 43 unicorns globally in the climate tech space. I didn't know that. So this is phenomenal. But 30 of them are in the transport and mobility space, right? It's obvious when you look at it. But also there are plant-based unicorns. There are different business models unicorn where they talk about sharing and stuff. And what I'm realizing is that when the ecosystem is ready, like we've seen in renewable energy, the J curve hits very, very, very fast. And Amal, to your point, the kind of work all of you are doing on the adaptation and resilience side, I believe that very soon a similar effect will take place, and this will hit, and GPs or investors will have plenty of opportunities of pools of capital coming in, because those will require expertise, again, to Shin's point, of understanding how do you amplify some of the impact that is necessary or the outcome that is necessary, in addition to, as I say, superior finance returns. One more question before I thank you all, and this is on the light-hearted side. This is the audience questions. Don't blame me for this. How does the Indian climate tech or climate GPs fare versus some of the regional or global climate-focused GPs in your experience? No answer? Avi?
I can actually.
I can try to give an answer. I think overall the Indian GPs, to me, are always very creative and aggressive and optimist. So I think, there is a real entrepreneurial spirit in India in a lot of different aspects. But that's my general impression, also compared to other countries.
Sorry, Prerna, you were saying something?
Sure, thank you. So, if you look at the total VC funding that has happened, which is globally 6% of the total VC money went into climate tech. In a country like India, where there are few dedicated GPs for climate, few which are generalists but do climate-related investing, the percentage has been somewhere around 6.5%. So it's almost similar to what the global number is. However, if you talk about unicorns, as you said, 43 out of which 30 are focused on mobility. India that way only has two main unicorns, Ola and Arthur Energy, which are focused on sustainability and mobility. I think a lot of it comes from the fact that there is less amount of funding that is available to Indian startups at present, and that comes from the entire aspect of Indian GPs being able to raise money more on a general India strategy. To have a strategy for India that is only focused on climate is something that we've seen very, very rarely, and that's of course something that we'd like to see more of in the future.
Yeah, so I completely agree with that. So I think we are also very early on in the innovation cycle for the decade, especially for India. So we are hoping that with so much of focus from the government, from the global sort of consciousness and the cultural context that India has, that it will seep through, and we will see some really good models. And we know that globally there is a lot of capital sitting out there, but we need more vehicles in India. So the market in India is not yet mature. There needs to be more fund managers, more need to appraise the kind of investments that are going to be robust and then get to unicorn stage. But we're very much an early part of the cycle, and of course there are distinct challenges in every country in terms of the context and different kind of risks that need to be managed. And I think India has a lot of diversity in the different states as well in terms of the different markets they are. So it's almost like a continent in a country in that sense. So I think it's not that easy really to compare, because climate tech for the world is also something that is with new technology coming up. I think there is a collective learning at the same time that's happening, and from that perspective, I think everybody will learn at the same time. Thanks. Back to you, Nakul.
Ladies and gentlemen, we are on the dot. This is 9:15 p.m. India time. All of us have done well. I just want to say one thing. It's very exciting to be in the confluence of innovation, technology, and sustainability. I think all of us are hopefully going to do our part to get this thing right. You guys have been a phenomenal panel. I hope the audience have enjoyed this, and I'm looking forward to continuing my engagement with you again. IIC, thank you. Shirley, over to you.
Thank you, Nakul.
Thank you. Thank you, Nakul.
Thank you very much. Thank you.
Thank you so much.
Thank you.
Thank you all. A big thanks to all the panel members, and thank you, Nakul. That was brilliant moderation. A very enriching discussion indeed. Some broad takeaways would be the heightened need for global partnerships. LP is now thinking of extending the support to innovative startups, not just with funds, but also through their incubation phase and a greater role of government through policy and as buyer. So with this, we come to the end of day one of the India Climate Investment Conclave. Thank you once again, lovely panelists. Hope everyone in the audience enjoyed all the sessions today. A lot of very interesting and insights and perspectives came in today across panels. What resonated across the board was the need for partnerships within the ecosystem to help innovative climate tech startups scale and grow. Larger commitment and support is needed from key actors like the government, corporates, investors, and consumers. And albeit briefly, we also did touch upon the need for philanthropy and catalytic capital in the climate space. On this specifically, we will delve into greater details tomorrow. On that note, we invite you to join us tomorrow on day 2 of the India Climate Investment Conclave, where we'll further dive into other climate subsegments like sustainable mobility, waste to value, explore innovative modes to finance climate tech startups in India, and hear from leading climate tech entrepreneurs on their exciting journey in the ecosystem. Other than the sessions in the evening India time, we also have a masterclass for investor readiness between 10 to 12:30 a.m. IST, where leading experts in the investing space will shed light on climate tech investing. We look forward to your presence there as well. So another smashing day to look forward to. Thank you very much, everybody, for your participation. Have a wonderful day or evening ahead. Thank you.